Let's now come to the stage 4 using the discounted cash flow method. And the stage 4 for stage 4 in case of using the discounted cash flow method is to determine the cost of capital is to determine the cost of capital. Now what does it mean? It means whose cost of capital do we have to determine? Do we have to determine the cost of capital of the buyer, or do we have to determine the cost of seller? And please remember, the cost of capital of the buyer and of the seller invariably will never be same. Unlikely to be same for a buyer and for a seller. Why I'm saying this? Because if the buyer and the seller has the same cost of capital, and assuming there are no other specific benefits to either of them, this transaction will never take place. And why this transaction will never take place? Because both of them have the same cost of capital. So therefore, buying or selling of this property, this hotel, by either of them is going to be benefit neutral. Is going to be benefit neutral. So that is one thing that we need to remember. Now the question as to whose cost of capital we have to determine question number 1, whose cost of capital we need to find out. And question number 2, why do we need to find out the cost of capital? And question number 3, how to find out the cost of capital? Let us answer these questions, these 3 questions one by one. So question number 1, whose cost of capital we need to find out as the valuation professional? Do I need to find out the cost of capital of the person who is purchasing the hotel, or do I need to find out the cost of capital of the person who is selling the hotel? So obviously assignment is coming to us from someone who is interested in buying the hotel, and we are going to do the valuation for the buyer, and therefore we have to take into account the cost of capital of the buyer and not that of the seller. That is what we have to be completely clear. Question number 2, why do we have to find out the cost of capital? Please remember, this is very, very important question in any valuation where the discounted cash flow method is being used. The cost of capital, why do we find out? We find out cost of capital so as to make the future cash flows comparable. So as to make the future cash flows comparable on apple to apple basis. And now please pay attention. What is going to happen? So let's say today my client purchases this 5-star hotel, and he is going to put in 1000 crore by way of investment. So his outflow is happening today of 1000 crore. Now he is going to generate revenue or cash from this investment from this hotel for all times to come. So money is going out today, and money is going to come in tomorrow, day after, day after, and like that. So therefore, obviously we all understand that the value of money changes with the passage of time. The value of money changes with the passage of time. Meaning what? Meaning the 100 rupee note that I have in my hand today and the 100 rupee note that I am going to have in my hand 1 year from hence, the value of this 100 rupee note is not going to be same. It is going to be different. In an inflationary market, the value of rupee is going to diminish with the passage of time. With the passage of time. So why do we need to discount? Why do we need the cost of capital? So number 1, we need the cost of capital to discount the future cash flows. And by discounting the future cash flows, what do we achieve? We achieve conversion of future cash flows in terms of present value. In terms of present value. So that means when I convert the future cash flows using the cost of capital as the discounting factor, what I am doing is I am making the oranges of future into apple, and that is how my outflow today and my inflow tomorrow becomes comparable, and that is the reason why do need the cost of capital. Why do we need the cost of capital? And that is for making apple to apple comparison possible. Please remember, when you are using the cost of capital, you are using cost of capital not because you want to find out the purchasing power of future cash flows. No, you are using the cost of capital as a benchmark to ensure that the cash flow which you are getting in your hand in future is profitable to you with regard to the investment that you are making today. Now, what does it mean? It means, please remember, cost of capital is not only cost, though by name we call it cost of capital, but cost of capital is not only cost. The cost of capital also includes the return expectation of the investor, of the person who is putting money. So the cost of capital will also include his return expectation. And therefore, and please pay attention, therefore cost of capital has got many names. Cost of capital has a name of benchmark, reference rate, hurdle rate, minimum required rate of return, expected required rate of return, internal rate of return, and so many names actually, and so many names. And so this is the answer, and let me sum it up. First of all, what is cost of capital? Cost of capital is, and why do we need cost of capital? We need cost of capital so that we are able to make future cash flows comparable with the present cash outflows. Number two, we are not trying to find out by using the cost of capital, we are not trying to find out the purchasing power. We are only trying to find out that the future cash flows are giving me enough return, are taking care of my cost and also my return expectation, and that is what is the cost of capital, and that is why we need it. Now we will come to the next stage, that is how to find out the cost of capital. Now before we come to how to find out the cost of capital, let me also tell you, cost of capital can be understood in two ways. So cost of capital can be understood as cost of equity, and cost of capital can also be understood as WACC, weighted average cost of capital. So now before we come to the next stage and find out as to how to find out the cost of equity, how to find out the WACC, let me open this, or let me make it open to every one of you. In case if you have any question, any doubt, please go ahead. I would be happy to take your questions. Else we will move to the next stage. Yes, Shubham, I can see your hand going up. You can please unmute yourself, or if you have posted your question in the chat box, then I will request Devendra to please read it out.